Topic 10: Accounting for liabilities. This video will focus on non-current liabilities.
Sri Marinding Enterprise has purchased a machine worth Rs 25,000 on January 1, 2020. Payment is made by check for Rs 5,000 and the remaining will be paid by signing notes payable, with 5-year maturity period. Annual interest rate is 8%. The end of reporting period is by December 31st annually. Instruction: prepare journal entries to record transactions in 2020 and to record payment of the note and interest on the maturity date.
To record asset purchase, we will debit machine Rs 25,000 ringgit and credit bank 5,000 ringgit and notes payable 20,000 ringgit. To record interest expense, we will debit interest expense 1,600 ringgit and credit interest payable with the same amount. The journal will be recorded on December 31st. To record payments of the note and interest on the maturity date, which is on the 31st of December 2024, we will debit notes payable 20,000 ringgit, debit interest expense 1,600 ringgit, and debit interest payable 6,400 ringgit, and credit bank 28,000 ringgit. The explanation for this journal entry is to record redemption of notes payable on maturity.
Mortgage payable. Let's look at example 2. One Touch BHD issues a Rs 200,000, 12%, 5-year mortgage on December 31, 2020 to obtain needed financing for a new research laboratory. The term provide for annual installment payments of Rs 64,000, including annual interest 12%. Required: record the issuance of mortgage payable. Record the adjusting entries for the interest expense on 31st of December 2021. Round off your answers for interest expense. Record the payment of principal and interest expense on maturity date, redemption of mortgage payable.
To record the issuance of mortgage payable, on December 1st, 2020, we will debit cash or bank with the amount of 200,000 ringgit and we will credit mortgage payable with the same amount. The explanation for this journal entry is to record the issuance of mortgage payable.
Based on the situation given in example 2, record the payment of principal and interest expense on maturity date, redemption of mortgage payable. Based on the installment payment schedule.
This is the schedule of payment for the mortgage payable. The first payment, which is due on the 31st of December next year, is 24,000 worth of interest expense and 40,000 worth of reduction of principal. So based on the schedule prepared, the journal entry will be debit interest expense 24,000 ringgit, debit mortgage payable 40,000 ringgit, and credit bank 64,000 ringgit. The explanation for this journal entry is to record interest expense and first installment payments.
Based on the situation given in example 2, record the payment of principal and interest expense on maturity date, redemption of mortgage payable. Based on the installment payment schedule.
The journal entry on 31st of December 2025 will be debit interest expense 1,059 ringgit and 23 cents, debit mortgage payable 8,826 ringgit and 88 cents, and credit bank 9,886 ringgit and 11 cents. The explanation for this journal is to record redemption of mortgage payable.
Next we will look at the example for bonds payable. On 1st of January 2020, Candlelight & Company issues RM 100,000, 5-year, 10% bonds at 100% face value. Journalize the entry for the bonds issuance.
To record the bonds issuance, we will debit bank 100,000 ringgit and credit bonds payable 100,000 ringgit.
Based on the situation given in example 3, record the adjusting entries for the interest expense on 30th of June 2020 and 31st of December 2020. Interest expense is paid every 30th June and 31st December of the financial period.
To record the payments of interest on 30th of June, the journal will be debit interest expense 5,000 ringgit and credit bank with the same amount. And we will record the same journal entry on 31st of December 2020 in order to pay the second half of the interest expense. Based on the situation given in example 3, journalize the redemption of issued bond on maturity date. The maturity date is due on 31st of December 2024, and the journal entry will be debit interest expense 5,000 ringgit, debit bonds payable 100,000 ringgit, and credit bank with the amount of 105,000 ringgit. The explanation for this journal is to record redemption of bonds at maturity. And finally, to present non-current liabilities and current liabilities in Statement of Financial Position, you can refer to these slides.
Thank you for watching.